Basically, a reverse mortgage is for anyone over the age of 62 years old. And you can use a reverse mortgage to purchase a home. Typically, that's going to be anywhere from 30 to 70% you're going to want to put down. So that's going to be good for a older couple, let's say, that bought a home or has a home. Let's say it's a 2-story home. They want to go to a 1-story. They want to downsize. The kids are gone. They're tired of all the maintenance and all the things. So they want to go from a house to a condo or a manufactured home or a modular home. So because basically this is just an FHA loan in reverse, right? I am Brandy Whitmire, direct mortgage lender, banker, broker, and also reverse mortgage lender, which is what I want to talk about today. And if you have any questions, this is a very sensitive subject for some people. So if you have any questions, leave them in the comments. I'll get back to you. I'll try to review them as I'm doing the live as well and answer anything that you have. But I want to kind of get rid of the misconceptions of the reverse mortgage, why it can be a great solution and a great possibility for you, your clients, our parents, and so on. So again, Brandy Whitmire, nationwide lender. If we don't have something, a product or a situation, then I can definitely get you to the place that does, and happy to do so. So talking about reverse mortgage, before you go away and think this doesn't pertain to you or this has nothing to do with you, I want you to consider just a few things. I want you to consider that one, hopefully everyone watching this actually turns 62 years old one day. Secondly, we probably know someone that's 62 years old or older. We may have a parent or a grandparent or a friend's parent or whatever, just someone, or maybe you are 62 years old, or maybe you're a loan officer that can't get someone approved because of their debt to income ratio or their credit score. They have some money, they have some equity, but their credit's not so great. They're not making income. Their spouse died, and now we don't know what to do. Maybe you're a realtor that has someone that has some equity in their house, but they can't get approved for a new loan, so they can't really sell their home. So maybe you know somebody or you are someone in that situation. So with that being said, I want to talk about why a reverse mortgage can be a solution. So basically, a reverse mortgage is for anyone over the age of 62 years old. And you can use a reverse mortgage to purchase a home. Typically, that's going to be anywhere from 30 to 70% you're going to want to put down. So that's going to be good for a older couple, let's say, that bought a home or has a home. Let's say it's a 2-story home. They want to go to a 1-story. They want to downsize. The kids are gone. They're tired of all the maintenance and all the things. So they want to go from a house to a condo or a manufactured home or a modular home. So because basically this is just an FHA loan in reverse, right? Or they want to upgrade. The kids are gone. We can go live in the expensive part of town now. We don't, we can go from that $200,000 house to the $400,000 house and never have a payment again. Like never ever have a payment again. So if you are 62 or you have a client or someone, can you imagine what that would do for you? I mean, I'm a person who likes solutions. So right when something goes bad, the economy goes bad, I want to be able to have something that I can go tap into. For example, I want to have a line of credit somewhere. I want to have credit cards that I can pull cash from. I want to be able to sell something. I want to own something that I can sell. I want to have these solutions. So even for this, my goal is at 62 years old to have 50% equity, 60% equity in a home and never have a payment again, because why would I? Why would I want a payment? If I don't have to, I could take those funds and use it to pay off other debt. I can use those funds to invest. I can use those funds for a multitude of other things. Maybe I just don't want to work anymore. So at least I want to have that solution or that possibility later to not have to make a mortgage payment Okay, so it's perfect for downsizing, for upgrading. Okay, there's no monthly payment. So the caveat to this is that you have to be 62, right? And you have to be able to pay your taxes and insurance and HOA. So how that would work, let's say example, okay? Let's say your mom, your dad, your grandmother, or you as a 62-year-old, let's say that you have a home and the value is at 500 right now and you owe 250, let's just say, okay? What we would do is we would place an assessment on you, how like your life expectancy, which is kind of morbid, but it's a thing. Like the only true thing that we know in life ever is that we're going to die. So we just need to be okay with that and prepare ourselves for that, because we're not going to be so young and so vibrant. I mean, I'm creeping up on 40 and I'm like, ooh, like I notice a little pain now, and everyone told me this is going to happen. So it's important to prepare. So this is not to be morbid. It's not to be, preparing for retirement and helping the people who did not prepare for retirement is valuable. And if you could offer that assistance to someone, I mean, why wouldn't you do that? Like you could save someone's life. You could help someone stay in their home. You could help someone stay independent for longer. As a human being, we want to be independent. We want to be able to stay in our homes. We want to be able to take care of ourselves. We want to have ease. We want to have support. We want to have security and safety. So this is what a reverse mortgage can help with. So let's say, again, the value is 500 and you owe 250. Now you can take a lump sum out of that, right? You can take one lump sum, tax-free, by the way, tax-free money, and throw it into your bank account. Or you can keep it as a line of credit and pull from that line of credit as you wish, or when the taxes and insurance are due, you can pull out the taxes and insurance from that line of credit and pay it, right? There's going to be a cap to how much you can borrow on that valued house, but if that's available, that's a possibility. Or you just don't have a payment. You just keep it as, it's always going to be an open-ended transaction, which means that you'll be able to pull from it as you can or as you want, right? So so there's a lot of misconceptions. For example, people like, oh, reverse mortgage, that the bank is going to take the home. They're not going to let the heirs have it. They're going to steal the home away from the kids, and whatever the case may be. Well, that's not the case. So a reverse mortgage is just like any other mortgage. So the banks don't want to own homes. Like we are not in the real estate business. We're in the lending business, and how we make money is lending money. So the interest gets tacked onto that balance. That's why you have to have so much down or so much equity in the home for a reverse mortgage, right? You don't have to make a payment because the interest is just being tacked onto that balance, right? That's why you have a life expectancy of you as a human on the house, right? But let's say, the senior passes away and you're the child. And now that home is in the estate or given to you as an heir. If the balance is more than that current value, you don't have to pay. You're only responsible for the value of the home or the balance. Now, let's say you have the house now. Now, it was 250. Now now the balance is 320. But the value is 500, or let's say it dropped to 480, or let's say it went up, hopefully, because appreciation is at 5.4 to 6.2% per year. So probably it's going to be higher, but let's even say it went lower. Let's say now you owe 320 or 380 and it's worth 480. You're going to get that 100,000 back. So the only time that you have to repay this loan is when all of the eligible seniors on the loan and the home have passed. If they haven't been living consecutively in the home for 12 months, if they haven't been paying their taxes, insurance, or HOA, and also the seniors don't have to be passed away. You can actually refinance out of that home or sell the home anytime. It's really just like any other loan. So again, closing costs are built into the loan most oftentimes. If you want to, you don't have to. We have people that go purchase a home, sell their home, purchase a home, take let's say it's a $5,500 house. They'll take the proceeds of that home or whatever. They'll take the $250, go purchase the home on a reverse mortgage. Again, never have a mortgage payment, right? They only owe the taxes and insurance and HOA when they're due, if there's HOA. but no mortgage payment. Can you imagine how much security that could give someone that you know, or one of your clients? Like if you're a loan officer and you can't get someone approved because of DTI or the credit score or employment or something like that, that's not a thing for reverse mortgage. I mean, we still look at a profile, but it's not based off of a certain credit score or income requirement or employment requirement. We look at the profile and, of course, the property and make that assessment from there. So it's much easier to get qualified for a reverse mortgage. And if you have someone that was 62 that had equity or had some cash in a reserve account or something, but just needed to refinance because they can't make the monthly payments are killing them, for lack of a better word, statement. But the monthly payments they couldn't afford anymore, or let's say their spouse passed away and now the debts and the monthly income is just more than they can handle, and they're stressed out, or they have more ailments, or they're sick now, or whatever the case may be. Imagine the security of being able to say, let's put you in this reverse mortgage. If you want to make a payment, you can. And by the way, just because you don't have to make a payment doesn't mean that they can't make a payment. They can still make payments if they want to and pay down the balance, but you don't have to. But imagine what that could do for you as an older person, for your parent or your grandparent as an older person, for your spouses or for your in-laws. I mean, you don't want your in-laws to move in? Hey, do you have some equity in your home? Are you 62? Well, I might be able to get you into keep you in your home and not my home, and not have a mortgage payment. How does that sound, right? So there are options. So, I talked about, again, you can always refinance out of it. You can sell the home at any time. You're not locked into it. The bank doesn't own it. The heirs have still take possession of the property if they want to. They can buy it out with a life insurance policy. They can refinance it. They can buy it with cash. They can sell it, whatever. It just needs to be done within 12 months after the seniors have passed away. So there is mandatory counseling for the seniors before they go into the process. That way you completely understand how it works. You know what you're getting into. And then it's basic from there. Once you have your counseling certificate, you apply with the counseling certificate. We do the financial assessment of you and the property, which is basically just doing an appraisal and processing the loan. And then we close 30 or 45 days later, and then you don't have a payment ever again. And that's basically how it works. We'd have to see, how much would be qualified for that specific value compared to your age. So, for example, a 65-year-old, you're buying a $100,000 house. You would have to have $55,000 down. Okay, so 45. But if you were 85, you would have to have $38,000 down. But you would never have a payment again. You could have less than that, more than that down, of course, so that you can pull from a line of credit. But that's basically it. On a $500,000 house, if you're 65 years old, you would have to have a balance or equity of $250,000. So it's basically about 50% in this scenario as a 65-year-old, and then it goes more from there. If you're 85 years old and you are purchasing a $500,000 house, you only have to have $171,000 in equity. That's it, because of life expectancy and because of the value of the home. So anyway, if you know anyone that this can help, and I want you to start thinking of people as their age. If you're a loan officer, if you're a realtor, if you're seeing any kind of senior struggling with money whatsoever and they own a home, let's talk to them. Let's see if this could be an option. Let's figure out if it could be a solution for them. You never know. So that is all things reverse mortgage that I want to go over today. I'm happy to answer any other questions. I'm happy to get you in front of a counselor. If there's any senior that we can help ever, we need to make sure that everyone understands that this is a possibility, and do our due diligence and making sure that they get in front of the right people to help be secure, be safe, feel good for the rest of our time here. So again, if you have any other questions, let me know. Yes, Sean, it is a sweet loan. It's a really great product. I'm sad that they're with such predatory lending on seniors in the past that has given it a bad name, because it is a great product. No matter if the senior has a job. If I have a job, why would I want a mortgage payment if I don't have to? It's just, I can use that money for investment for so many other things. So yeah, it's a great loan. I really, really want to debug all those myths about it and make sure that our seniors know that it's an option to stay in your home, keep your independence, keep your cash flow up, and have some security in your home. So if you have any questions, reach out to me. You know to message me here, DM me. You can call us at the office, 214-660-5000. And always you can email me, bwhitmire@financemayhome.com. You can go to the website, and I will be back next week, Wednesday. Sorry I wasn't here last week because of Thanksgiving, but I got in trouble for that already, and so I'm not allowed to skip any of the lives on Wednesdays anymore. So reach out. Will be here all throughout the holidays, and I will see you next Wednesday. Talk soon.